IndusInd Bank opened sharply lower as the RBI approves only a one-year term extension for MD and CEO Sumant Katpalia versus an ask of a 3-year extension.
Shares of Omax trade with gains as it launches a new phase of its world project in Faridabad. The estimated value is around 600 crore rupees.
Gensol Engineering opens with cuts as promoters sell about 2.5% stake to reinvest in the company's business. This is contrary to the management's comment on CNBC-TV18 just last week, stating that promoters would be looking to buy stake in the company soon.
Hyundai Motor India dips more than 1% after the company seeks shareholders' approval for 7 material related party transactions worth more than 31,000 crores. We'll discuss this in greater detail during the course of the show. Hello and welcome to Chartbusters. We are coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel and with me is Mangalam. And as you can see, we are pumped up post yesterday's win. The men in blue, well, Mangalam, they drove home the advantage. And what a sight to see, right? The boys doing a bit of a jig post the game. Sunny Gavaskar couldn't control himself as well. Good times.
Good times indeed. And I see you wearing a blue jacket as well with the orange tinge out there. Reminds the color of the jersey of the team. We can't wear the jersey of the air. Might as well wear the same color as the Indian cricket team itself. We called it the Motilal Oswal studio at the top, but this is again, you know, the stadium that we've created in our little CNBC TV18 studios itself. Those are the champions. What a team it is. And the good part is that there was no retirement that was announced by either Virat Kohli or Rohit Sharma as against what the most were expecting this time around. So good on them, man. What a camaraderie, what a team, what moments. What
well, that's right. ROCO, right? They continue to play and that's good news. And, you know, Mangalam, what's good is that you can see continuity as well. The next gen is up to the challenge. They have been, being taken care of in the able hands of Virat as well as of Rohit and champion, so to call it. Great game, pumped up. And it ended pretty okay as well. So we got our required hours of sleep.
We did get our required hours of sleep. And, just to wrap this up, Roko in Hindi is to stop. We say mat roko to both of them. And having said that, you know, the most interesting dichotomy in terms of generations move was that when we won it last in 2013, Virat Kohli was the one who was dancing in front of the champions thing. And now he's the man who's a statesman of the game. And you have Shreyas Iyer dancing. So, you know, your point of the transition being extremely smooth as well. So what we'll do is we'll just give high fives to each other, kickstart our day when it comes to the markets itself. The market's behaving fairly well, to say. The bulls also celebrating. The mid-cap index, you can quibble about it. But after a big 2% move yesterday, all of last week, we're holding all well.
Well, that's right, Mangalam. It's a good-looking screen as well, right? Because we started off with a cut of around 50 points that immediately got bought into. And for the time being, the Nifty is trading with some green. But let's brighten up the screen. Let's welcome Shivangi Sadhav, Motilal Oswal Financial Services, who joins us. Hi, Shivangi. I'm sure you're feeling quite pumped up as well post yesterday's win. What about the markets? Do you believe we're good for more? The 20 DMA now is within 150 points for the Nifty.
Good morning, Mangalam and Nigel. Thank you so much for having me. Of course, it was a pumped-up win. And talking about the markets, from the last 5 trading sessions, we've seen that the markets have also pumped up, so that's a good sign. Green and blue all in, color. So, of course, talking about the index, we've seen that support-based buying is quite strong, and we are seeing put-call ratio consistently improving from the last 3 trading sessions with IVs cooling off, which indicates that bulls are quite comfortable and active above 22,500 marks. Now, we are looking at 23,000 next on the cards with a support of 22,450 levels. It's a close support, but overall buying is intact, and we've seen a negation on the weekly basis, which will support the ongoing move. There are pockets of sectors which are contributing to Nifty, but then again, we've seen some underperformance from the banking index. Although NBFCs are performing, but heavyweight banking stocks have, come to a little lackluster move. But overall, this index has been also consolidating and looking quite positive to stay stable in these levels. So we're looking at 48,000 as an important support here with an upside move towards 49,500 marks. Now, of course, the major focus will be on the NBFCs as compared to the heavyweights.
Right, so let's ask you about a couple of stocks. While you give us your pick, Shivangi, in specific, I'd like your thoughts on Reliance because It was a good last week for that stock. It's consolidating today. Do you think this consolidation needs to be bought into? And the second one I'm looking at is Trent as well. Trent has had a very yo-yo sort of month. It's moved up a couple of occasions. It's moved down a couple of occasions. Today is at the low point of trade. So on Trent and Reliance and the stocks that you've laid out for us today.
Absolutely. So Reliance is a reflection of the market itself, and we've seen that there has been a good short covering move as well over here. And talking about Reliance, of course, there has been a good amount of buying even in today's session, and we are looking that 1250 is an important level to watch out for in Reliance. And the next levels that we are looking at Reliance is 1300 marks with a support of 1225. Now, talking about Trent, of course, this has also been one of the beaten down stocks and one of the most bruised ones in this entire market fall. And we are seeing that there has been 5 months of underperformance here. There is some sort of relief and range bound consolidative move over here, but then again we'll have to wait and watch for this one to again gain strength. Now, on my radar is first up is JSW Steel, which has witnessed a good amount of follow-up buying after the breakout on the daily basis. We've seen that metal pack is in action, and it has surpassed its previous hurdle zones as well. So this one's looking quite positive, and we're expecting this to move towards 1070 levels. So buying on that with a support of 1008 levels. Now, second pick on my radar is Bajaj Finance, which has been one of the most strongest in this entire NBFC and financial space. It has been making an upward sloping channel from the last 16 weeks and, supporting its 50 DEMA as well. We have seen that, bulls have been quite active here despite the market volatility and weakness. So definitely this one's an outperformer, recommending a buy here with a target of 8900 and a support of 8380 levels.
All right, take that point, Shivangi. Thank you so much for joining in, giving us your view on the markets and celebrating the win of India with all of us here in the studio as well. Take a short break, come back. On the other side, we'll focus on Hyundai Motors. Remember, we spoke about it in the headlines, the stock's under pressure. We have Sriram Subramaniam, who's the founder and managing director of IndusInd Research, to discuss the shareholder concerns over Hyundai India's proposed related party transactions. What is it that they suggest? Welcome back. A couple of these FMCG stocks, they're picking pace right now. The top gainer on the Nifty, among the top gainers, is HUL, which has moved to the high point of trade. We're seeing some traction come by in names like Nestle as well. And if you pull up ITC too, that stock is up around 0.5%. So FMCG stocks, after the rubbing that we've seen, maybe a lot on the street believe that the worst of consumer sentiment is behind. We'll obviously keep getting comments on this space in the very near future as well. Infosys is the other one. IT stocks, after underperforming all of last week, starting this week on a good note. So Infosys has moved to the high point of trade. But the sector in focus today is the auto space, and the stock in particular is Hyundai Motors, after they've made a proposal to buy goods and services from related companies in excess of 31,000 crore rupees for the next financial year. It's divided leading proxy advisory firms. So to discuss this and more in detail, we're joined by Sriram Subramanian, who's the founder and managing director of IndusInd Research. Sriram, the divide is pretty clear. On the one hand, it's a related party transaction done at an arm's length of 32,000 odd crore rupees. On the other, it is that, okay, it's an Indian arm of a Korean company. So what's wrong in taking benefits from, the back end things that the Korean parent has to provide? So in light of both these sides, the question is, where do you stand and what is it that you are recommending shareholders do?
Good morning. I don't think Hyundai, it is natural for auto companies to source components or parts from various subsidiaries or where they have tie-ups or joint ventures and source various aspects of the car from various entities. Amongst these 7, one of them relates to sourcing components from Hyundai Motor Corporation, Korea itself, One relates to sourcing from Kia itself, which is owned partly by Hyundai Korea. But the more important one, which is the first one, which is Mobis India, the one that has concerns. In that sense, why is Hyundai India sourcing from Mobis India, which is an Indian company, and that too they are sourcing tools and machinery. They are not sourcing components. They are sourcing tools and machinery from an Indian entity. So to that extent, there will be concerns in terms of whether the pricing is in line with market, or because that is the Hyundai India is the only client of Mobis India. So to that extent, there are concerns. I don't think the company itself had wanted to explicitly have these, or there are abusive related party transactions, but the company could have gone out and reached out to shareholders, put more information out there as to why it is compelling to source 12,000 crores worth of capital goods from Mobis India. I think that becomes a big concern. Though I think the company is not abusing, but at the end of the day, they are new to the market. So we can sort of say that probably over a period of time, they will realize that they have to outreach to shareholders. Also to be noted is these 7 resolutions are all ordinary resolutions, which needs only the 51% shareholding to vote, and Hyundai as a parent has 82% shareholding, and these 7 resolutions will easily get passed because of Hyundai as a parent voting for these resolutions. But be that as it may be, the company needs to outreach to shareholders, outreach to proxy advisory firms, and try to address these concerns, because going forward, investors will keep remembering these.
Okay, all right. Hi, Mr. Subramaniam, and thanks a lot for joining in. So as you're saying that the resolution will get passed, but the point is it could have been done in a better manner. Could have consulted shareholders first and gained their confidence as well. Now, out of these 7 points, how many of them pass muster with you?
I think all of them pass muster, but we have this one called Four-Star, where Mobis, especially the transaction with Mobis, which
the
is
first one.
The first one, that is a big concern, because why are you sourcing capital goods from an Indian entity is not clearly explained. There's no logic for that.
So what next? Because you said these will pass. So, I mean, whatever proxy advisory firms say does not in that sense matter, largely because, you need just 51%. So what would your stand on this be?
No, I think investors have a long memory. There will come a time in future where, if the company is arrogant and continues to not share information, there will come a time when they will need support of shareholders, and when shareholders lose trust, the resolutions will not get passed sometime in future.
Right, but whatever little listing history that Hyundai has had from the red herring prospectus, etc. as well, all of that has been filed with the exchanges and the regulators. There doesn't seem to be any glaring corporate governance issue with the company, right? So this may well, like you said, be an honest mistake or something that they will learn in their journey of being a listed company. So then does that mean that shareholders should ignore this, or, for instance, not give it as much concern as is being given right now?
Yeah, you have a valid point. One can pardon the company for its ignorance, so to say. But shareholders need to raise it at as part of this postal ballot, right, to the company, or at least the institutional shareholders need to raise it in broker conferences or whenever they engage with the company. Otherwise, what is the compelling reason is not understood by shareholders.
All right, we take that point. Thank you so much for explaining this to us. So the stock is lower by about 1.5%, but like you said, not a big glaring concern, but something that the company needs to address. Had it been a glaring concern, I'm sure the market would have reacted a lot more aggressively than what it is reacting right now. Sriram Subramanian, thank you so much for joining in and giving us your valuable insights into this itself. With that, we'll slip into a short break, and as we do that, here's a quick note for all you viewers. What does it take to move the needle on gender parity? The biggest names in the business, policy and leadership, all of them come together at this mega summit for HSBC presents CNBC-TV18 Future Female Forward, which is co-presented by Cognizant. And to answer the question that I first asked, tune in live on CNBC-TV18 today at 5:30, where we bring you insights from those who are shaping the future.
Welcome back. Well, the Nifty is almost raising its bat because it's a century now. We're almost 100 points higher in today's trading session. So intraday got a bit of a dip, and that has got bought into. A few stocks, in the last 45 minutes that have done well. Axis Bank, that one's now moved to the high point of the day. Brilliant move is what we're seeing out there. And the Adani Group stocks, both from the frontline index as well as from the broader markets. You have Adani Enterprises that's moved to the high point of the day. Adani Green as well has seen a good bounce back. And Adani Total Gas, all of them are doing quite well. If you look at the IT pack, well, Infosys, that's clearly the stock that's doing bulk of the heavy lifting today. Infosys is the large cap Manglam that's moved to the high point of the day. And that explains why the bulls are getting further ammunition as we move up.
Take that point. Take a look at some of these non-index large caps as well. I'm looking at Jio Financial Services, makes its way into the Nifty later. And that stock too has recovered a fair bit from the lows. Now marginally in the green, but remember from the lows, it's been about 1.5% in terms of recovery. PI Industries continues to do well. So we have that stock up and about for you on the screen. And the metals pack, that too isn't particularly badly bid. We have JSPL, which too has moved to the high point of trade with a gain of almost 2.5%. But it's IndusInd Bank, which is trading with cuts after the RBI has only approved a 1-year extension for its MD and CEO, as against the board's own approval and the company's ask of 3 years. The stock now down about 3.5%. Abhishek joins in to tell us more. Abhishek.
Well, RBI for second consecutive time has approved lower than what board had asked for IndusInd Bank's MD CEO term. So RBI has given a 1-year term extension to the current MD and CEO of up to March 2026 against the 3 years that was sought by the board. Last time around, when the board had sought for 3 years, RBI had given only 2 years. So analysts do say that this means that the board will have to find a replacement. Now that will create a leadership uncertainty in the interim period. So previous similar instances were seen with respect to lower tenure given by RBI versus the ask was for RBL Bank 1-year extension versus 3-year sought, Bandhan Bank 3-year extension versus 5-year sought, and Federal Bank they have not approved the 1-year extension that they had asked for. So that have led to negative stock reaction with respect to the price reaction in the near term. So weak profitability even in FY26 as per IFL securities coupled with the leadership uncertainty should keep the stock price under pressure. Now brokerages say that they remain bullish with respect to the buy call, but they have cut the target price, like Jefferies has cut the target price, MK has cut the target price, IFL securities as well has cut the target price on the stock, while BOFA has actually downgraded the stock to underperformance and cut the target price to 850 per share. Back to you.
Take that point, Abhishek. Thank you for that. With that, we are coming to the close of this edition of Chartbusters. And as we do that, let's tell you, as always, what comes up to the right of Nigel here. India's business news leader, which is now just a click away, which is the all-new CNBC-TV18 app. You can get access to instant news, breaking news, in-depth articles, financial world updates, all of them at your fingertips. Just download the app on either your Apple Store or the Google Play Store, or you can just scan that QR code, which redirects you to the download link of the app, and that app gives you everything on your fingertips.